Let's get right into today's analysis. KOSPI rises 0.74%, but honestly, that number doesn't even begin to tell the real story of today's incredibly volatile session. We saw a massive semiconductor spike this morning that just completely faded by the afternoon.
It was a wildly energetic start to the day. I mean, the market woke up swinging hard. So let's dig right into the exact data that kicked off this morning frenzy. $22.11 billion. Yeah, billion with a B. That is the staggering figure South Korea's customs agency reported for semiconductor exports. And get this, that's just for the first 20 days of July alone.
To put that into perspective, we're talking about an explosive 180.6% surge year over year. That single sector just captured over 40% of the entire nation's exports. Demand is just absolutely roaring right now.
And it's not just abstract data on a spreadsheet. Out at Busan Port, you literally have massive volumes of hardware physically moving out to the global market as we speak. It completely defies any of those lingering doubts we've been hearing about capital spending. So naturally, foreign investors aggressively chase this data. They poured a massive 2.63 trillion won in net buying into the market. But you have to notice the intense concentration here. A full 70% of that money went straight into just two stocks, SK Hynix and Samsung. This early buying was so aggressive, it actually triggered a rare buy sidecar right at 9:06 a.m. If you're not familiar, that's a market mechanism that literally hits the pause button on program buy orders for 5 minutes, just to cap extreme futures volatility. This was our 20th buy sidecar this year. Adding to all that frenzy, non-arbitrage program trading pumped another 1.52 trillion won into cash stock baskets. That basically lifted the entire broader market right alongside our chip giants. But here is the catch. Despite that massive adrenaline-fueled morning spike, the momentum just completely evaporated. The KOSPI gave up almost all of those early gains, heavily pulling back into the afternoon to close up a mere 0.74%. So what caused the fade? Well, heavy domestic offloading. While foreigners were buying like crazy, domestic institutions basically countered with 1.4 trillion won in net selling. And retail investors joined the exit, dumping another 1.22 trillion. And that institutional sell-side pressure coming out of the Yeouido Financial District, it wasn't spread out evenly. It was highly concentrated, essentially completely offsetting those aggressive foreign chip purchases we saw earlier. The absolute center of this battle was over Samsung and SK Hynix HBM3E chips. Institutions dumped over 1 trillion won of SK Hynix alone. In fact, their combined net selling on just these two stocks eclipsed their total net selling across the board. They were actively crushing the chip rally. Samsung Electronics faced the exact same intense pressure. They had this beautiful initial 6.15% spike in the morning, which was systematically crushed down to a bare 0.58% gain by the closing bell. Just brutal. But it wasn't just institutional profit-taking. We have to talk about the macroeconomic headwinds dragging the broader market down. The unresolved US-Iran military tensions and those persistent Strait of Hormuz shipping risks are casting a very long, very heavy shadow right now. This geopolitical premium is directly hitting energy. WTI crude jumped to over $86 a barrel, and Brent pushed past $91, which, of course, instantly fires up near-term inflation fears all over again. And when inflation fears rise, bond markets immediately start pricing in tighter policy. Korea's 3-year yield rose to 3.91%, but the 10-year jumped even faster, climbing to 4.397%. So why does this matter so much for tech? One phrase: the discount rate. When bond yields rise, the discount rate applied to future cash flows goes up. This severely impacts the present valuation of high-growth tech equities. It's basically financial gravity for tech stocks. This high-yield environment ultimately suffocated the broader index today. So despite all that incredible morning optimism, those macro pressures meant 399 stocks still ended the day in the red. Finally, we have the ultimate overarching shadow that pulled down the afternoon: Alphabet's impending earnings report. A lot of investors just opted to take profits and sideline their risk ahead of this critical U.S. release. Because the critical question on absolutely everyone's mind is this: Will Alphabet's capital spending validate this massive AI infrastructure investment cycle? If hyperscaler cloud demand stays strong, it's a huge green light for future orders for Korean memory makers. But if they scale back, well, that shifts the future earnings outlook entirely, and that uncertainty kept buyers totally sidelined this afternoon.
The market right now is balancing on a total knife's edge between booming real-world exports and some very heavy macroeconomic realities. Will big tech earnings act as a catalyst for the next leg up, or the domino that starts a broader tech sell-off? To find out and to get your Asian market closing news before the New York Open, make sure you hit that subscribe button.